Hello, from the floor of the CME, this is Chris Robinson with your Traders Exclusive comment for today, Thursday, May 31st, last day of the month. We're finishing out this month, heading into a new month. It's also, probably the next 6 weeks are the most important weeks for the growing season, for the grains. Go back and look at those charts, long-term charts, the month of June into about the middle of July, very, very key as to whether or not we get some sort of weather disruption. That can come in two forms, either too much rain, like we had in 1992, 1993, or a drought, like we had in 88 or 2012. Those two weather extremes can really impact prices and price discovery. So that's number one. If you look at what's happened in the past 5, 6, 7 trading days, you got to start with corn, wheat, and then I'll finish with beans. It took the corn market 5 months to eke out a 50-cent rally. And then we went home for the long weekend, for the Memorial Day weekend. We came in, the market made a new 11-month high, and then within 48 hours had dropped and corrected 22 cents. That was a big correction. It came off a change in weather forecast. Also, we got new fundamental information that the crop went in well. It's pretty much all planted. It's also got a very high good to excellent rating. So the crop so far is in good shape. Because of that, the market corrected. If you are speculating or if you are a producer and you're not using some sort of risk management, that's the type of volatility that can really hurt you. It takes 5 months to give you 50 cents, and in 2 days, you lose 40% of that. You go to bed one night and you're saying, what happened? If you do not have some sort of risk management strategy set up, that's the type of scenario that can really make you want to wake up and pull your hair out if you stand there and watch a third of your profits disappear overnight. So you've got to you have to have some sort of a plan. If you don't have a plan, you've got to find somebody who can help you get that plan. Looking at wheat, same scenario. Wheat led us up. We had over a $1 rally. We started the beginning of the year, market very, very oversold. We got an 11-month high. The same time we got the 11-month high in corn. So that was over a $1 rally. And then what happened? Well, in 2 days, we lost 40 cents, 39 cents exactly, but 40 cents, a huge correction. Again, if you didn't have some sort of a plan to protect yourself and capture that rally, you know, you're waking up and you're very, very frustrated. The least volatile market, ironically, has been soybeans. New crop soybeans have been in a 60-cent trading range really for the past 2 months. We did have some negative chart action, though, for new crop soybeans. What am I talking about? Well, that same night that we had the highs in corn and wheat, we had a new contract high for November beans. They got the 1060.5, and then that same day they settled about 20 cents lower. That's called a key reversal. We have yet to recover from that. There's a big line of resistance at that 1060 level in new crop soybeans. There's support at $10. As I speak to you now, we're trading around 1020, 1030 in the middle. Again, we are waiting to see if the weather impacts us at all. I think at this point, even though there are concerns about tariffs and reprisals and so on and so forth, the number one thing that's going to be driving this market is going to be the weather. Number two, you're going to have to check every Friday a commitment to the traders report. We came in last week. The funds were long about 200,000 contracts of corn. That's 1 billion bushels of corn. They've lightened up the load here in the past 3 days on the sell-off. They were long about 50,000 contracts of Kansas City wheat. They've also lightened up the load on this sell-off. For soybeans, they're long about 100,000, which isn't a very big position. I think that they're kind of holding keeping their powder dry there to see if we get some sort of a weather issue. But I can't stress enough, the next 6 weeks are the most important, certainly for corn. Soybeans can recover sometime through August, but the focus is going to be in the next 6 weeks. Every 12 hours, there's a new weather forecast. That means every 12 hours, that's a setup for a volatile move. Hopefully, if you're a bull, you know, we get higher prices. But you can see the type of risk that's out there if you don't have a plan to cover the possibility that you go to bed and you wake up and the market's 30 cents lower. If you're looking for help, give me a call, Chris Robinson. You can find me on the web, therobinsonreview.com. Have a great rest of the week.